Welcome to this short overview about the equities market ecosystem in the U.S. It is designed to familiarize retail investors and other interested parties with different forms of stock ownership and to show how transactions are settled and registered. By the end of this video, you'll be familiar with the direct registration system, the differences between beneficial and registered shareholder ownership, and how shares move between the different forms of registered and beneficial ownership, including the roles of transfer agents and DTCC. Let's get started. A company's share register records the details of everyone that owns shares through the direct registration system, or DRS, and those who hold a physical share certificate. It also records the aggregate stock holding owned by the Depository Trust and Clearing Corporation, or DTCC for short, through its nominee entity, CD&Co. Many issuers appoint an agent called a transfer agent, or TA, to administer their share register on their behalf. TAs must register with and are regulated by the SEC. They are a critical part of the market's infrastructure, making sure there are accurate records of registered share ownership, communicating with shareholders on behalf of issuers, processing dividend payments, and updating investors' holding balances. TAs also administer DTCC's shareholding on the register. The DTCC undertakes clearance and settlements of trades in the U.S. through its depository subsidiary, DTC, and CD&Co. As the U.S.'s centralized securities depository, the DTCC is a member-owned, nonprofit organization and legally owns around 80% of the stock in American companies on behalf of participants and investors. With this stock immobilized under its custody, buyers and sellers do not need to exchange a paper transfer, forms, or certificates when shares exchange hands, enabling either side of the transaction and the change in ownership to be recorded on its own systems. When shareholders hold stock through DRS, ownership is evidenced via a statement similar to a bank statement. This means their name will appear on the issuer's share register and they can manage their shareholding themselves. Computershare administers over 12 million dematerialized or uncertificated holdings, of which approximately 8 million are pure DRS holdings and 4 million are book entry plan related. Although millions of investors also still hold share in the form of share certificates, their use is declining, and many companies no longer issue them, as DRS is a tried, tested, and more efficient alternative. Registered shareholders can request that their intermediary, such as a broker, instructs the DTCC to transfer their shares into beneficial form. The broker will usually make this request for the deposit of DRS securities via the DRS profile system on the shareholder's behalf. At 4 a.m. each working day, the TA will receive the deposit requests that were submitted by brokers the previous day. The TA will then process these in batches during the course of the day. DRS profile transactions are processed wholly electronically, and the TA will also update the share register to reflect the change. For certificated deposits, the TA receives a daily batch of deliveries of certificates from the DTCC, which it then matches to the relevant holdings and processes. DTCC withdrawals can only be initiated by a DTC participant. The TA receives a set of instructions to transfer securities from CD&Co. into the name of individual investors at 4 a.m. each working day. It will then generally dispatch statements to the newly registered investors the next business day. A TA will also adjust the proportion of shares allocated to the DTCC through CD&Co. whenever necessary as the result of a corporate action. For example, a stock split or a spin-off. Generally, however, the TA will only adjust the DTCC's aggregate position. By law, both directly registered and beneficial shareholders can vote on company matters, including in elections and on proposals at company AGMs. Based on investor preferences, the issuer will send printed or electronic meeting materials to registered holders directly and to beneficial owners via their intermediaries ahead of an election or meeting. Registered shareholders can return their votes directly to the tabulator, which administers shareholding voting on an issuer's behalf. In order to facilitate beneficial shareholders having a vote, the DTCC issues an omnibus proxy, which authorizes its participants to vote on its behalf. The participants will then liaise with beneficial owners on their voting preferences and then submit an aggregate of these votes to the tabulator. The issuer is therefore informed of the number of votes, but not the identity of beneficial voters. TAs calculate dividend entitlements based on the number of shares each investor owns on the record date. The day after the record date, the DTCC will send the TA a report that states the payment it expects, which the TA will then check against its records. On the dividend payable date, the TA will remit a single wire payment to DTCC, which will then pass funds on to its participants. The participants will then pass payments on to their clients. It will also send payments to registered shareholders directly via ACH, wire, or check. The TA can also arrange to pay international shareholders in their preferred currency. Transfer agents play a key role in the infrastructure of the markets. They are regulated by the SEC and other federal or state-based regulators, as are banks, brokers, and the DTCC itself. Working on behalf of their respective clients, these parties work together day in, day out to ensure their transactions can be settled effectively and in accordance with the interests of investors. For more information about this topic, feel free to visit our resource page at computershare.com/getregistered.